The Fed cut rates. So why in the heck did mortgage rates go up? They went up. So mortgage rates actually rose this week, settling around 6.28% for a very prime conventional buyer, according to Mortgage News Daily. So we got really exactly what we wanted. We wanted a 0.25% Fed funds rate cut. Check. We got that. They discussed the runoff of the balance sheet, which is another topic for another day, but we got that. Check. Inflation data came out better than expected. Check. Everything was lined up for mortgage rates to move lower until our friend Fed Chair Jerome Powell opened his mouth and said a further reduction in the policy rate at the December meeting is not a foregone conclusion. Far from it. Those three words, far from it, really just kind of was like, oh my God, the markets reacted to that. And then the rates went up right after that. So he basically rained on everyone's parade. I mean, it's amazing to me how much words matter with the Fed. Wall Street just like, they look at every single word, every single phrase to find hidden meaning. And the Fed knows their words alone can move markets up or down. They're the global power, and it can change the financial world tremendously. So in this case, Powell was essentially saying, hold your horses. Inflation isn't fully tamed, and the job market is still unclear. My guess is he's probably seeing data behind the scenes that we don't get to see and the rest of us don't have access to. So back in September, the Fed projected 2 rate cuts this year, one in September, which we got, and another one in December, 2 more. We got one today. Wall Street traded on that expectation, and then Powell threw sand on the fire and created all this uncertainty. And that uncertainty pushed mortgage rates up. Wall Street does not like uncertainty. They like to have everything in order, in line, and ready to go. So adding fuel to this fire, though, is the government shutdown. We're now on day 31 with little progress. Man, it's a stalemate. It's tough. So the shutdown delays key reports that the Fed relies on to make monetary policy, such as the Bureau of Labor Statistics jobs reports, the BLS report, the personal consumption expenditure, PCE, which is their favorite measure of inflation. So right now, the Fed is kind of driving that bus at night without headlights. They're missing key data and they can't see the full picture. And they're a little bit concerned about making decisions if they don't know the full story. So once the government reopens, and who knows when that'll be, they'll need some time to catch up on the missed reports first before they can make confident decisions going forward when the new reports come out. So the bottom line, the market is stuck in the mud without any solid data coming out anytime soon. It's hard for the Fed, Wall Street, or anyone else to make clear moves and feel super confident about it. So I think we're going to go sideways for a while. Now, if you missed the Friday playbook this morning, we also talked about a hot topic that's getting a ton of attention. Now, our Friday playbook, just for those who may not know about it, is every Friday, Sam and I jump on, we talk nerd about rates and predictions and mortgage markets and all that good stuff. So join us Friday morning, 8:30. Now, that hot topic, using your exciting 401k for a home purchase. What an exciting topic. Well, my recent Instagram and TikTok post on this topic has already hit over 1.6 million views. I'm famous right now, 1.6 million views. Proof that this message truly resonates with buyers out there. How in the world would you get 1.6 million views on a stupid 401k post? But here's the takeaway. And if I look at the comments, they're basically saying, you hear all the time, I don't have enough money to buy a home. Well, guess what? Most people don't realize is that their 401k can be a treasure chest waiting to be unlocked. While there are rules around withdrawals, penalties, and income tax that may be due, it's very common for buyers to use these funds for a down payment. So be Sherlock Holmes with your clients. When someone says, I can't buy right now, I don't have enough money, ask where they work. See if it may be a corporate type situation, a casino, and if they have a 401k. That might be the key to unlocking their dream home. And remember, the best way to refer me is in a group text. Just text your buyer with me together, and I'll take it from there. I'll jump in and we'll get things going, get them pre-approved, get them ready to go, get them excited to go shopping. We'll hope you have a happy Halloween, get all the tricks and treats that you want, and I'll see you next week. Gaylord out. Bye-bye.